Welcome. So today we're going to talk about a very important topic, and we're going to practice this topic from the practice assessment 1 and 2 from the AAT website. So we're going to looking at question number 3 and question number uh, 4 from the practice assessment 1 and practice assessment 2, and also going to talk about very important point that normally student find difficulty in the exam, and sometimes they do some common mistakes. So I like to discuss all of these things on this today's session. So hopefully this session will be very important to make a note for the future reference. So in case if you don't remember it, so that you can follow this note in future. So let's talk about a few things first. So task 3 and task 4 is all about three topics. The first one is the partnership, and the next one is the national insurance contribution, and the final one will be the capital gain tax. And part of the capital gain tax will be relevant to the rollover relief. So you're going to talk all about today. So you're going to talk about the partnership, we're going to talk about national insurance, and the capital gain tax calculation with rollover relief. So let's start with our first assessment, and we're going to open the task. I think this is assessment 2. So let's move on to the assessment 1 first, then we'll come back to the 2. So we have here our first assessment and task 3. Now, this task, the first one, is about the partnership for 8 marks. This is one of the easiest task in the exam, because we will have the partnership with the national insurance contribution. But it's still sometimes the student find it difficulty. They do a very common mistake in the exam. Now, the partnership have some calculation, but this is not relevant to your business tax paper. So if you remember, when you've done your level 3, you have done the partnership appropriation account, you have done partnership current account and the capital account. And there you have learned the partnership is like a sole trader business. So few of the sole trader people, A, B, C, they become together and they start a partnership business. So it's not like a limited company. And also the partnership business, they do not pay any corporation tax. So they pay the tax individually. For example, if we have a 3 partner, and if these 3 partners join together for the partnership business, at the end of the day, each partner will be liable to pay tax individually. So the business don't pay any tax as a whole. For that reason, we have to calculate the income for each individual partner so that they can pay the tax based on their income. For example, if you look at this question, so we have here 3 partners. So you can see we have Dino, we have Danny, and we have a Jake. Now, these 3 partners form the partnership business. In the exam, you're going to look at 3 partners. It's going to be exactly like same. And the first thing you need to look at the time period. So the question will be very much similar the way you're practicing now with the practice assessment. So they'll tell you like there was a 2 partner at the beginning and 1 partner joined after 6 months, or 1 partner joined after 8 months, or they will tell you there was 3 partner at the beginning and 1 partner left after 6 months or 9 months. So this is the story. Either 1 partner will join or 1 partner will left. So the most important point here is to understand how to make the appropriation for the profit. Now the question will give us some profit and they'll tell us this is the profit for the year end. But all we have to do, we have to split this profit based on when the new partner join or the existing partner left. And based on that, we have to do some adjustment for the salaries. We need to do the adjustment for interest on capital. And if we have interest on drawings, we also need to add it back to increase the profit. Now, it's very important to remember the appropriation account, because later on, this profit need to be split between the partners based on the ratio. So when the new partner join, there will be new ratio. When the existing partner left the business, there will be existing ratio. So let's focus on this one. And for the time being, let's read the question and I'll explain in detail. So let's look at this one. It says that Dino, Danny, and Jake have been in a partnership business for several years. On 31st of October 2024, Jake left the partnership. As I said, one person either will leaving the partnership business or another partner will join the partnership business. Profit for the year end 31st of January 2025 were 87,800. Now this is very important. Remember that any salaries, any interest of capital or interest on drawing, anything that we pay to the partner or receive from the partner will have impact on this profit. That means if we pay a salary, the profit will go down. If we pay interest on capital, the profit has to go down. Very important. The partnership profit are shared as follow. Each partner has the annual salary, 24,000. Now, if you see the word annual salary, that means it's a yearly salary. So if you make a split for 6 months, or 8 months, 4 months, or 9 months, 3 months, remember that the salary need to split, divide by 12, multiply by 9, or multiply by 6, depends on the period. Dino has a return on capital 2%. So Dino charge return on capital. So based on the capital Dino invested, he charged 2% on his capital. So we need to know how much money invested by the Dino in the business. So he invested 10,000. That means 10,000 multiplied 2% for the whole year. Again, we need to split if it is 6 months, 6 months. Profit were shared equally among the partner until 31st of October 2024. That means up to this period, all the profit was split equally. So we have 3 partners, Dino, Danny, and Jake. So divide by 3. How much profit left? Divide by 3 until October. Because on October, what happened? Jake left the partnership. For that reason, we have a calculation till October. After that, remaining month will have only Dino and Danny. Profit are shared in ratio 80% and 20% between Dino and Danny from November. So we need to look at when the year is ended, and obviously we need to split the month. So this is our story. Let's try to understand what is our first step. The first step is to split the profit. So the total profit we have here 87,000. So let's write it down, 87,800. So this is my total profit from the partnership. Now I need to see how many months we have to split. That's the question. So if you see here, the year end is January. That means year is started when? February 2024. So if the year is ended 31st of January 25, that means this year was started February 2024. So February to October. So you need to count February, March, April, May, June, July, August, September, October, 9 months. So this 9 months will be the first period, and the remaining 3 months we understand 9 and 3 is a 12 month. So remaining 3 months will be for the next period. So for that reason, you can see here period to October. So this is the 9-month period, and the period to January, that is November, December, and January, is 3 months. So we need to split the calculation. Now let's split the profit based on this calculation. So 87,800, let's split it. So 87,800 divided by 12 multiply 9. And that gives me the profit here 65,850, because 8499.99, so you can make it 0, you can round it up. So this is the profit. And the next one we have for the 3 month, same way, 87,800 divided by 12 multiply 3. So 87,800 divided 12 multiply 3, and that gives me 21,950. 21,950. So this is our first job, to split the profit. Now from the profit, what we need to do, we need to minus the salaries and the interest on capital so that we can find how much profit left to share. So let's try to find the salary. The question already gave us the salary. So it's 18, because for the whole year is 24. So divide by 12, multiply by 9, it will give you 18. But the question gave it to us. So 54,000 is the total salary. So I said salary minus 54,000. So that's my first thing has to go. The next one is the interest on capital, 150. So minus interest 150. Remember that if the question give us the interest on drawings, it will be added back with the profit, not deduct. So this one we have, and now we need to see how much profit we have left here. So let's find it out. 65,850 minus 54,000 minus 150, and that gives me 11,700. So 11,700 is the profit left. For how many partner? 3 partner, because until October, there was Dino, Danny, and Jake, because Jake left after the 31st of October. So this one have to be shared equally, so divide by 3. And that will tell me how much is the profit share equally, so 3,900. So everyone will get profit 3,900. So our first story is done. So just quickly complete that. So we can say here the profit share will be 3,900, 3,900, 3,900, and that's it. The total 11,700. Our job is done. 65,850. So the total, if you look at your profit, that was 65,850. It has to be matched exactly this one. So our first period is done. Very simple. The next period, exactly the same way. First, we need to minus the salary. So let's look at the salary we have. So salary, this time, the salary we need to calculate. If you look at the total salary was 24, each of them. So if Jake left, remember that this section, Jake is not here. So Jake will have nothing. Jake will be only empty because Jake left. So we have salary 24. So from 24, if 18 already given for the 9 months, so how much left? 24 minus 18. So 6,000 left. Or you can do 24 divided by 12 multiply 3. It will give you the same thing. So 6 for Dino and 6 for Danny. So let's do that. 6 for Dino and 6 for Danny. So I have total 12,000 salary. So let's minus the 12,000 from here. And the interest on capital, remember the total interest was how much? 10,000, 2%, so it was 200. So from 200, we already minus 150 from here. So we have only 50 left. And this is only for Dino. So let's make the interest on capital for Dino is 50. So let's minus it again. Interest 50. Now we need to see how much profit we have left to split. So 21,950 minus 12,000 minus 50. So you have 9,900. That's the profit left for the next period. And now we only have Dino and Danny. So Dino will get 80% and Danny will get 20%. So we say 80% for Dino and 20% for Danny. So let's do that. 80% at 7,920. So 7,920, and the 20% will give me 9,900 multiply 20%, 1980. So 1980, and that's give me total 9,900, and that should be exactly match my total balance. If you look at this one should match my total profit, and this total should match my total profit for the business if we added this 12 month, because here is the 12 month. So it's very important to understand it and do the calculation properly. This question will not be very difficult, but make sure you remember how to do. Don't include all the salary on the first and then you don't have any salary. Do not minus all the salary from the first period. So that will give you the wrong calculation. Have to be very careful. All right, so this is our first part. Let's move to the next part. Let's have a look at the next one. The next one we have here, the national insurance. Now it's very straightforward, very simple. So let's go to our national insurance and let's have a look what we have there actually. So the national insurance page number 89. Let's quickly go to the national insurance. This will be very straightforward and easy to get. So, chapter is quite small, so you're not gonna see much. So here we have the chapter overview. Let's have a look at that. All right, so national insurance contribution. Now, if you remember your personal tax, if you already done the personal tax exam, you know, the individual has to pay two types of tax. As employee, you pay the class 1 and class 1A, that is 12%, and the class 1A you pay on the benefit. But the company also has to pay the national insurance contribution, and they pay like two types of national insurance contribution. One is class 4 and one is class 2. But here with the new syllabus, you really don't have to worry about the class 2. That is fixed every week anyway. It's not difficult, but you really don't have to do any question for the exam for the class 2. I haven't seen like they said anything about the class 2, so you can really like focus on the class 4. So the class 4 is quite straightforward. So the class 4 said, if you have a trading profit that is 12,570 or less, so if your trading profit is either 12,570 or less, you don't have to pay any national insurance contribution as a business. Now, if you don't remember the 12,570, you remember the personal allowance. So this is exactly the same amount. The personal allowance and the national insurance contribution threshold, the lower limit is exactly the same, 12,570. Then if your trading profit is more than 12,570, then you pay 6% on that. But there is upper limit. The upper limit is 50,000 to 70. Now, for example, if someone have a trading profit, for example, 20,000, then from 20,000, all you have to do, you have to minus the 12,570 and then multiply with 6%. That's all you have to do. But if someone have a trading profit more than 50,270, then you have to charge additional 2% more than 50,270. For example, if someone have a trading profit 60,000, so from 60,000, first you need to split it. So you do 50,000 minus 12,570, that is 6%. And then 60,000, sorry, here it is 50,270. So 50,270 minus 12,570, that will be 6%. And 60,000 minus 50,270, 50,270, that will be 2%. You have to make a split. Do not do 60,000 minus 12,570 and 6%. No, there is a lower limit threshold that is 12,570, and there's a higher limit threshold that is 50,270. So if it is more than 50,270, you have to stop and make a split. So this will be the fixed calculation. But if it is less than 50,270, you really don't have to do anything. Just like the amount, for example, 20,000 minus 12,570 and multiply by 6%. That's it. All right. Now let's move on to our question. So let's look at this one. Here we can see we have class 4. So Blake has accessible trading profit from his sole trader business, 56,000 in 2024 and 25. He also has income from the employment, 14,000. Now this is very irrelevant, the employment income, because on the employment income, we pay the class 1 national insurance contribution, that is 12%. So nothing to do with the business here. So Jake only will pay here for the business because any income from the employment that is deducted at source. So before he received the salary on his bank, he already paid it. All right, so class 4 at 6%, class 4 at 2%. So let's have a look. So 56,000. Same thing we need to do. We need to do 50,270 minus 12,570 multiply 6%. And then 56,000 minus 50,270 multiply 2%. Very simple. So let's have a look. So 50,270 minus 12,570 multiply 6%. That is 2262. 2262. And this one, 56,000 minus 50,270. That is 2%. That is 114.60. 114.60. Now here, this question will always tell you that state your answer to the nearest penny. So you need to make sure you show the penny. Don't round it up or don't round it down. You need to make sure you make a nearest penny. So for example, 60. All right, so this one is done. It's quite straightforward. So national insurance contribution, 2 marks, easy in the exam. And also the partnership will be very easy. Let's move to the next one. The next one we'll look at here, the capital gain tax. So let's talk about a little bit about the capital gain tax. Now here, you really don't have to worry about the capital allowance. You only have to worry about how much capital gain tax we need to pay. But the gain, obviously, like only the gain, you really don't have to worry about the tax. So you need to only look for the gain. The important thing here is for the company to remember the indexation allowance. If you remember your indexation allowance, there we have to calculate like how much is the indexation allowance based on the cost and the capital expenditure. Now, if you remember the indexation allowance that is frozen on December 2017, in the exam, they might give you a different indexation factor just to make you confused. But remember that you'll stop there. So if any enhancement expenditure or any capital expenditure the business made after December 2017, do not give the indexation allowance. Or if you have an indexation factor after the December 2017, do not consider that. Let's read this question and then we're going to look at some explanation. So here he said this task is about chargeable gain and allowable loss for the company. This task contained part A to B. Company B disposed of a machine during the year ended 31st of August 2024. The machine costs 87,000 plus legal fee. Now it's very important to understand the capital expenditure. Remember that the question will give you some breakdown of the capital expenditure. For example, the cost of buying the land, the cost of buying the building, and the legal cost, the surveyor fee, this sort of cost, and they can give you some costs like insurance and the maintenance. So you need to know which cost is a part of your capital expenditure and which cost is not part of your capital expenditure. This is one of the important point. The student always struggle in the exam because sometimes they took the wrong one and added with the capital expenditure, or sometimes they ignore the right one. They did not include this cost as a part of the capital expenditure. So you need to know any asset that basically business buy with the intention to use it in the business. That's our non-current asset. And if any asset, any expense we need to spend in order to make the asset usable, or without that cost, if we cannot have this asset has to be part of the capital expenditure. For example, even the delivery cost, for example, the surveyor fee, for example, the legal cost, this type of cost has to be included as a part of the non-current asset or the capital expenditure cost. So here, if you look at this question, it says this is the machine cost plus the legal fee. So I need to add that. So this 890 pound will be part of the machine cost. In January 2018, 3,000 was spent on improved to machine to make more efficient. Now you can see easily it is a capital expenditure, but there is a trick here. What is the trick? The trick here is the improvement is made in January 2018. That means this after the December 2017. So you have to remember that if any expenditure we make after the December 2017, this type of expenditure we cannot give the indexation allowance. So they give it to us intentionally so that we made a mistake. But remember that if this one is made after the December 2017, we do not calculate the indexation allowance on this 3,000. All right, in December 2020, 800 was spent replacing a broken switch on the machine. So this one is after even 2017, and 800 was spent replacing a broken switch to the machine. Now this is a replacement. And if it is a revenue expenditure, remember that if it is a revenue expenditure, we are not allowed to include that cost. So we have 87,000 here, plus we have 890. So we have 87,890. This is our cost, 87,890. But this one, the replacement, a broken switch on the machine, it is not a capital expenditure. It is not improving the efficiency of the machine. For that reason, it is a revenue expenditure that we cannot consider as a part of the cost. Company B sold the machine for 108,000 in May 2024, incurring legal fee of 486. Remember that any legal fee the business need to pay in order to sell the machine, or any selling costs need to be minus, because this money never came. We need to see how much net we receive from the proceed. We look for the net proceed. That means 108 minus 486. That will give us the net proceed. The indexation factor from January 2013 to December 17 is 0.131. In the exam, they might give us more indexation factor just to make us confused, because there is a replacement and there is a improvement. So if we use it, we'll make a mistake. Okay, now it says calculate the chargeable gain to be included in the corporation tax calculation. So we need to just calculate, and that's the general thing. If there is a deduction, you should show in a minus, so we know what to do. Let's do this one. So the first thing we need to write the proceed. How much is the actual proceed? So 108 we have actual proceed 108,000, and the selling expense need to be minus. Do not forget to put the minus sign. So 486 is our selling cost, and we need to find the net proceed. So this is our net proceed. Cost including acquisition of the expense. This is the acquisition cost, including the expense. That means 87,000 plus the legal fee 890. So that is 87,890. And again, remember to minus because we're looking for the gain. So from the proceed, all the costs need to be deducted. Enhancement expenditure, we have 3,000 minus 3,000. And we're not going to consider this one, the broken switch, because it is a revenue expenditure. Indexation allowance. Indexation allowance is basically for our cost. So this one we have 87th. So we have here indexation allowance 0.131, and that will give us 11514. So we have 87,890 multiply 0.131, and that gives me 11514. So 11514 only on the cost, 11514. Do not calculate the indexation factor on the 3,000 because this one is after the December 2017. All right, that's it. That's quite simple. That's all you have to do. So in the exam, they might give you some more amount, and you have to pick which one is the revenue, which one is the capital. So you have to decide. Be careful with the indexation factor. This question is another easy question for 8 marks. Very straightforward. If you know how to do it, it's going to be very easy for you. All right, so let's have a look. The next part. The next part we have here, and that is from the rollover relief. So let's open the book a little bit and let's find our rollover relief. So computation of the tax. All right, so this one is losses. Let's find where is the rollover relief. You can actually search here. Rollover. All right, found it. All right, so we have here with the rollover relief. So let's have a look what they're saying here. So for the rollover relief, let's talk about a little bit about the rollover relief. What is that? That is a replacement of the business asset relief. So the HMRC said, if you sell your old asset because you have to buy the new one, then you really don't have to pay the tax on the capital gain. So the profit you make, you don't have to pay tax on this. You can defer all the gain. That means you don't have to pay right now. You will pay future when you're going to finally sell the asset and you never buy any asset anymore. For example, let's say we have a machine and that machine is quite old. And obviously, we have to change the old machine. And if I sell the old machine for £100,000, and if you buy another new machine for 150,000, so I sold it for 100, but I buy the new machine for 150. So HMRC said, because you already adding or you're reinvesting all the money you receive from the old machine, so obviously you don't have to pay the capital gain tax. But the problem is happen when we buy the new machine, but the old machine, the money we receive, we don't invest all the money. For example, when you sell the old machine, we receive 100,000, but from the 100,000, we only reinvest 50,000. So if we only reinvest 50,000, So the 50,000 is with us in our bank. So there is a problem with the HMRC. So if you have money left on your bank, and if you do not reinvest it on the business, so HMRC said you have to pay the tax on that because you make some gain. So for example, if I buy asset 50 years before for 1,000, and after 50 years, if I sold it for 10,000, so I make again 9,000. If I reinvest all the 9,000, there will be no tax. If I do not reinvest, there will be tax. If I part invest, like half of the money invest, so half of the left we have to pay the tax on that. So let's have a look a little bit here. We have, it says eligible asset. So at the eligible asset, we have a land and building. So it has to be land and building. Fixed plant and machinery. So the plant and machinery has to be fixed. And old and new asset can be different categories. So it has to be different categories. It's not like if I sell one machine, I have to buy the same machine. For example, before I was in a printing business, so I had a lot of printers. So I sell all the printer to buy some, for example, camera. So the printing and the camera is a different thing, but it's still okay. I can still eligible for the rollover relief. So that's the first thing. The next thing is the timing. The timing is very important. The day I sold the asset, for example, if I sold my asset, for example, on 1st of June 2025. So I sold my asset 1st of June 2025. So from 1st of June 2025, I will have 12 months before, so 12 months back, or 3 years after. 3 years after. So within this period, if I buy another asset, I will be eligible for the rollover relief. That means if I sold my asset here for 10,000, and if I already buy another asset like 12 months before, don't have to sell it to buy the new one. I can already buy the new one. So this money, I can use it here. So I don't have to use this exactly money. If I buy any asset 12 months before, I don't have to pay the gain based on this gain. Or if I sold it 10,000 now, and if I use this 10,000 within next 3 years to buy another new asset, I can still claim the relief and I'm not going to pay any tax on this gain. So this is their saying 12 months before and 36 months after. All right, so the gain chargeable is the proceed more than reinvest. So if my proceed is more than reinvest, then what will happen? I will have a gain. So taxable gain, proceed minus reinvest. That means, for example, proceed is 10,000 and more than reinvest. And so reinvest is 8,000. My proceed is more than the reinvest. So my proceed is 10. I reinvest only 8. That means 2,000 pound I have with me. So I have to pay gain on this 2,000. So taxable gain. And balance of the gain will be deferred. So in this 8,000, how much gain we have? This gain I can defer. I'll show you one example. It will be more easier to understand that. And if the proceed is less than investment, for example, I sold it for 10 and I reinvest 12,000 to buy the new asset. So I invested more than I received from the old asset. So there will be no taxable gain and all gain will be deferred. What will be the impact? The base cost of the new asset will be reduced. I'll show you that as well. So this is the story for the rollover relief. In the exam, you will have a rollover relief question, no doubt. So you have to make sure you prepare for that. So let's have a look. One rollover relief calculation. So here we have some condition. It's very important to remember the 3-year rule. So 3 years before, 1 year before, 3 years after. In the exam, they can make you upside down. They can tell you, oh, 3 years before, 1 year after. So it's look like similar, but actually it is not the right one. So you need to make sure you remember that. Okay, let's look at this question. So a freehold factory was purchased by H Limited on May 2002 for 60,000. So 2002 May, the cost was 60. So that was the cost. And sold 110 in 2024. So you can see easily we make some gain. Proceed. 110. So we sold it for 110 and the cost was 60. And we have some indexation allowance up to December 2017. So if we minus the indexation allowance, we have a gain. So we're supposed to pay the tax on this gain unless we reinvest all the 110,000. Now the next part it says a replacement factory was purchased on 6th December 2024 for 120,000. So you can see easily I sold my old asset for 110 and I reinvest to buy the new factory 120. So I add 10,000 from my pocket. That means all the money I have received from the old asset, I have reinvested everything. So if I reinvest everything, I'm not going to pay any tax right now. So all the gain will be deferred. So it said all proceeds reinvested, therefore defer full gain. Now what if I don't invest? That's going to be another story I'll show you. But what will happen in future from this 120, the new factory I buy, so the cost for the new factory is 120, but HMRC said, listen, you cannot say your cost is 120 for the new factory because the old factory you sold, you never pay any tax on the gain. So this gain need to be minus from the new factory cost so that in future, when you will sell this asset, you will pay more tax. So that means this 15,000 has to be minus from here. So 15,320. You can see here. So my new base cost will be 104,680. That means in future, if I sell this asset for example, 150,000, if I sold it, I'm going to minus 104,680, not 120. So I'm going to forget the actual cost when I buy this one. I'm going to use this one, so it'll be more gained. So the gain will be more and HMRs will get more tax on that. That's the main point. All right, the next point here is what if we do not reinvest the all money? So you see here, it says F Limited realized an index gain 300,000 on the disposal of an office block used in its business. The office block sold for 700,000. A new office block was purchased for 600. So I sold it for 7 and I reinvest 600. So 100,000 I have with me in my bank. That's the problem. If I keep any money from the disposal value or the proceed value, I have to pay the tax on that. So HMRC said the proceed not invested are 100,000. So you didn't invest all the 700. You keep 100,000 with you. So this amount of the gain is immediately chargeable. So pay the tax on this amount. The remaining gain, 200,000, that can be rolled over and the base cost will be reduced by 200,000 because you have a gain total how much? So you sold for 700,000 and the cost was 300,000. That means you make a gain here 400,000 and you can see here this gain is some gain will be rolled over and some gain you cannot like roll over because you did not invest the whole amount. Now, out of this gain, how much tax you need to pay immediately is depends how much money you have reinvested. So I sold it for 700,000, but I reinvested only 600. So 100,000 I have with me, we have to pay the tax immediately on that. And another 300,000, that's not the cost, that's the gain actually. So they said it's a gain, it's not the cost. So that means the cost was 400,000. So the gain was 300,000. So out of 300,000 gain, 200,000 I'm going to roll over and 100,000 I'll pay the tax immediately. 200,000 will reduce from the base cost. So 600,000 was the new investment cost. I'll minus 200,000. So the new cost will be 400. So in future, if I sell this asset, I'll pay more tax. So this one is very, very common in the exam. Make sure you revise well and remember all the calculation. All right, now let's go back to our assessment and let's have a look what we have here. So you can see here, the first one we have here, it says to qualify for rollover relief, both assets sold and the asset brought must be a building. That's not a condition. Don't have to be building. It could be land and building. It could be a fixed plant. So it's not like only has to be building to qualify for the rollover relief. That's false. To qualify for rollover relief, the new asset must be brought no more than 3 years before. You see, it's opposite. 3 years is after, not before. 1 year before, 3 years after. This is also false. And the next one is says rollover relief is restricted if the asset is sold partially used for the non-trade purpose. That's true. Remember that the asset has to be used in the business wholly and exclusively for the business purpose. If you have an asset, for example, that partly used for the private purpose and partly for the business, this asset is not eligible for the rollover relief. So to claim a rollover relief, the asset has to be fully and exclusively has to be used for the business. All right, so this is our first question. Now we'll move to our next assessment, assessment 2, and we're going to look at the same thing, task 3 and 4. So we're going to look at the partnership, the capital gain tax, and we're going to look at our rollover relief. So let's have a look. The next one, we have here the partnership. So the same story we have done before, but only the difference here is that percent is here, the profit share. So let's have a look. Okay, so here it says, this task is about analyzing the profit and loss of a partnership business and calculating the national insurance contribution, okay? So H and M have been trading as a partnership for many years, sharing the profit as follow. H paid 1,200 per month as salary and M, Margot, 1,400 per month. Remaining profit share equally. So first there was two, Hugo and Margot, so they share the profit equally, £1,200, the salary per month, and 1,400 for Margot. On 1st October 2024, again, so there is some changes will happen 1st October. Remember that if it is happened 1st of October, that means the previous period was until September. 1st of October, do not give the whole October. Remember that. So 1st of October, if any changes happen, we have to consider until yesterday, that is 30th of September or 31st of September, whatever is the month, but do not give the whole October. James joined on the partnership. So James joined from the October. So whole October will be the new partner. So it will be Hugo, Margot, and James. So three. But before October until September end, it will be only Hugo and Margot. The partnership agreed the share profit. So salary will be now 15, 18, and 1,000, and profit share will be 40, 30, and 30%. The partnership taxable profit for the year ended 31st of January 287. So we understand the year is ended 31st of January. So that means year is started from February. So February to January. So February 24 to January 25. The partnership profit allocation has been partially completed. All right, so you're going to follow our same story. We're going to take the profit first. So let's take the profit. 287,652. That's for the 12-month profit, and we have to split the profit. So how many months? So up to September. So February, March, April, May, June, July, August, September. So 8 months. 8 months for the first period and 4 months for the next period. So let's do it. So 287, 652 divided by 12 multiply 8. So that gives me 18,097. So let's check one more time. So 287, 652 divided by 12, multiply 8. So 191,768. Very careful with the calculator. So make sure you use the big calculator like this so that you have a bigger button to do the calculation fast way. The next one we need to separate, so we can just minus. It will give me up easily how much it is. So 287, 652 minus the other one, so 95, 884. Or you can do divide by 12, multiply 4, same thing. Now from here I'm going to minus the salary. So salary here for 8 month, here for 4 month. So for the first 8 month was 1500 and 1800. There was no gems, so let's have a look how much was the salary. So for the Hugo, 1500 multiply 8, that is 12,000 for the whole year, but we are talking here only for the 8 month. So we take 1500 multiply 8, 12,000, and divide by 12, 8, 8,003. So we have the first one. That's for the second part, October. So let's do the first part first here. So 1200 multiply 8 and 1400 multiply 8. Here 1500 multiply 4 and 1800 multiply 4 and 1000 multiply 4. Okay, so let's do the first part. So 1200 multiply 8, that gave me 9600. 9600 minus, then we have 1400 multiply 8, 11,200, 11,200. There is no interest on capital, so it's quite straightforward. That's good. So minus this one. So 191,768 minus 9,600 minus 11,200, and that gives me 170,968. Same thing here. We have 3 here. So we have 1500 multiply 4. That is 6,000. 1800 multiply 4. 7,200 and 4,000. So if we added all this, so it will be 4 plus 6 is 10. 10 plus 7, 17,200. 17,200. And 95 added 4 minus 17,200. That gives me 78, 684. That's it. Now just share the profit. So we have a profit share for the first 8 months. There's only 2, Hugo and Margot, and it was equal. So 170,968 divided by 2. That is 85, 484, 85, 484 equal. And here there are 3. So it will be 40%, 30%, and 30%. So 78, 684 multiply 40%. That is 31, 474, 3.6, so it's 4. And then the next one, 23, 605. It will be same the next one as well, 23, 605, because both are 30%. And that's it. Now we have to just complete that. So the salary is 9,600 and Margot 11,200. The profit share is 85, 484, 85, 484. And it will be total 170 and 68. That's it. The next one salary we have 6,000, 7,200 and 4,000. And the profit share is 37, 474, then 23, 605, 23, 605. And the total is 78, 684. And now we can see, we can always match the answer. We can say this one 170 has to be matched with 170. And then 95 has to be matched with, 78 has to be matched with 78. And 287, the total has to be matched with the 287. All right. So partnership is done. Let's move to the next one. The next one we have the national insurance again. Very simple one. Let's do this one quickly. So we have a taxable profit 46. So it is less than 50,270. So you only don't have to do much. So you need to do 46,782 minus 12,570 multiply 6%. That's all. So 46,782 minus 12,570 multiply 6%. That is 2,052.72. Do not forget the penny because you have to enter nearest penny. 2,052.72. The next one it says, the next one is quite simple. It says, as I said, do not consider the employment income. So remember any employment income, just to make you confused, do not consider for the class 4. So taxable profit is 4,782. So if it is less than 12,570, so it's nil, it's zero, so it will be 0. All right, so that's it. Let's move to the next one. The next one we have here task 4, and the first part we have here for the capital gain tax. So let's have a look. It says this task is about chargeable gain and allowable losses of company. This task contains part A to B. Company C disposed a factory of 520,000 during the year ended April 2024. So this is the disposal value. Legal fee 4,000 were incurred. So make sure you minus that. 520 was the disposal value minus 4,000 because you need to find the net proceed. The factory was built June 1997. Company C incurred the following cost. Now this one they give us intentionally so that we can pick the right amount of cost. So we can pick only the capital expenditure, but not the revenue expenditure. Land is a capital expenditure. Construction of the factory, 86,000. Yes, this is a part of the capital expenditure. Stamp duty and legal fee, yes. Without this, we cannot have the land. So it's also part of the capital expenditure. So it's 122 is the cost. And we have indexation factor. Very simple question. So let's do that. The proceed we already have. That is 520,000. Selling expense need to be minus 4,000. And the cost of the acquisition 122,800. And indexation we have to just multiply 122,800 multiply 0.766. Do not forget the minus. So we have minus. Okay, so 122,800 multiply 0.766. That gives me 94,065. 94,065. And I have again 299,135. Very simple. But in the exam, they will not make it very simple. Remember that they'll give you at least one or two revenue expenditure and one or two capital expenditure you have to add, and careful with the indexation factor for uh, December 2017. After that, any capital expenditure or improvement expenditure business did, do not give the allowance for that. All right, so let's move on to the next one. The next one we have here for our rollover relief. So let's have a look. This one. The first one, it says company D sold a warehouse, the old one, 864,000 on 10 October 2024, realizing gain 282 200. Now, if you like to find the cost, you can just find the difference, and the difference will be the cost. Because if we sold it, the selling price is 864, and if we make a gain, 280, 200. So if we just minus that, that will tell me how much is the cost. The company did replace the warehouse with a smaller property and occurred on 31st December 2024. So we sold it when October 24. On the same year, we buy. So we definitely eligible for the rollover relief, because from the sold date, from the disposal date, we can buy after 3 years, within 3 years, or 12 months before, 1 year before, 3 years after. The property cost 790. Now you can see here we sold for 864, but actually we reinvest 790. So this is the problem. We have some money with us. If we have some money with us, HMRC is not happy for that. So you have to share the money with HMRC. So 864,000 minus 790, and get that gives me 74,000. This 74,000 is the gain that is taxable immediately. So this one, it says, the first one, calculate the gain chargeable on the sale of the old warehouse if a claim for rollover relief is made. Even though if I make a claim, this 74,000, I have to pay the tax immediately because I never reinvest this money. So 74,000. The next one is calculate the amount of rollover relief claimed. So how much is the rollover relief we claim? So if you see the total gain was 280,000 and 200. And if we pay the tax on 74,000 immediately, so 280,000, 200 minus 74,000. So 206, 200. This one is the rollover relief we claim, because the total gain I make 280, and from 280 I only pay the tax on 74. That means this is the whole gain I carried forward as a deferred. So I said I'll pay the tax on future when I sell the new asset. And calculate the base cost. So my base cost will be reduced. The new asset cost is 790. So 790 is the new asset cost. From there, this gain need to be minus. The gain I deferred now, I have to minus from the new asset cost. So that new asset cost will go down. And in future, when I sell this asset, then I'll minus only this cost. That means I'll pay more tax. So 790 minus 206, 200. And that gives me 583, 800. So this is my new cost or base cost. So in future, if I sell this asset, 790,000 asset that I buy now, if I sell it, I'm going to minus the cost, 583, not 790. All right, so let's write it down. 583, 800. And the next one is says, Company D cannot have any further rollover relief on the old warehouse even if it make additional investment in qualifying asset, because the qualifying reinvestment for the rollover relief has to be in a single asset. That's not true. The amount we have 74,000 with me, or the reinvested, the money we didn't reinvest it, that is 864 minus 790. If I want to invest on any other asset, qualifying asset like land or fixed plant or machinery, I'm still eligible. It's not like I have to use the whole money to buy one asset. No, it's not the requirement. Can buy more asset as long as the asset are eligible. I'm fine with that. So that's false. All right, so this is our end of the question number 4. So that was for the rollover relief. So we have covered a few sections today, very important section, and this section will be definitely in the exam. As I said, like the rollover relief, definitely in the exam. Make sure you practice enough for the rollover relief, and also to calculate the base cost, the deferred gain, and what happened if we don't reinvest. So make a note for that, write it down. Also the partnership, very careful. It's a very easy question, so there is no way you should lose 1 marks from the partnership and the national insurance contribution. On the other hand, the chargeable gain could be a little bit tricky with indexation and the capital and the revenue expenditure. Make sure you make a note for that. If you have a note and if you revise well, this question is very straightforward, and you can be really fast in the exam, and you can finish your exam very easily if you practice enough and if you remember all of these things. Thank you very much.